We are joined by Neal Dingmann, Managing Director at Truist Securities, who covers Ovintiv. Neal, thanks very much for giving us the time. You reckon this is a decent deal for Ovintiv? They got a good assets at an okay price?
Thanks for having me. Yes, absolutely. I think it's a great price. You look, not only did they buy this actually over 15% cheaper than what we've seen recent deals up there, they were able to sell those properties in the Uinta down here in the States for about 20% more on I look at it on a flowing barrel basis. So again, I think it's a win-win. I think they got a great price for selling some assets in the U.S., specifically the Uinta, that I don't think they were getting credit for, and they're buying some assets, not only that had some nice production with it, but as you mentioned, has a large amount of acreage that is going to give them significant running room in the future years.
Yeah, because they're not getting massive production in the short term here. I think about 70,000 barrels of oil equivalent immediately.
That's right. I mean, this deal was really, look, I think any North American company, the number one concern I get, or I should say number two, like number one is always about finances, leverage, debt. Number two, it's how much inventory does company XYZ have? And I think this now solves that answer for shareholders for Ovintiv. Now, I mean, one could say 5 years, 10 years. I mean, it definitely gives them ample running room. And I think that was the key behind this deal.
Tell us about the Montney in Alberta. How is it viewed by U.S. investors? Is it seen as a rich hydrocarbon asset in North America?
I think it is, which I don't think yet, not maybe as, I think still the Permian down in Texas is probably still the top because of just the returns we see from this. But I think Brendan's point that you played earlier, I think is well taken. And that is, look, the rest of these plays, Bakken, Eagle Ford, I mean, I can go on, are very mature plays. And you're trying to find areas that have true growth of premier plays. And I really do, when you look at the well economics, I agree with this statement. I think it's 1 and 2, Permian Basin and Montney in that order.
Tell us about Ovintiv's decision to dump these assets in Utah. I mean, they got a decent price, $2 billion, these Uinta assets. Is that a reasonable move, cleaning up the portfolio like that?
It is. I mean, right now, investors are get very concerned about too much leverage. And look, this company already had around $6 billion of debt with the goal of getting down to $4 billion. So look, I think the last thing investors would have wanted is a net debt of adding another $2 billion. So obviously by buying, was it 2.3, 2.4 and selling $2 billion, it was a pretty minimal from a dollars out the door. So again, it keeps that balance sheet in order. They've been paying down debt quite quickly, and I think they'll continue to do so. And I think it's a very good price. It's actually a price. You had a company like SM that had gotten in that play not terribly long ago, and Ovintiv was able to get over 10% more on a flowing barrel than what just another company recently paid. So I thought it was a very good price to sell that in Utah at this time.
Ovintiv is halting its debt buybacks for now. Is that a thing that U.S. investors want to see from oil and gas companies, aggressive stock buying, or stock repurchases?
Yeah, yes and no. I mean, I think the answer is once your debt is down or thus your leverage is down, preferably less than 1 times, then everybody right now would like you to step up that shareholder return, give you a nice base dividend, one that can be sustained in very low oil prices, somewhere around $40. And then on top of that, preferably a pretty large buyback, a stock buyback, assuming if your stock, especially if your stock is trading at a discounted value, which we do believe on a relative basis, Ovintiv certainly is.
With this weakness in oil prices, oil stuck, it seems, for the moment below $70. If oil and gas shares come down decisively, would investors welcome companies using that to repurchase lots of shares?
Not too much. Again, it's still really a debt story, number one. And I think there is a point where investors want you to really lean in hard on stock buybacks. I mean, there's levels where, even right now, I believe Ovintiv trades at less than a 3 times earnings multiple, and that to me is considerably cheap. I think obviously it goes down anymore where you're in the low 2s. I think at that point they would back up the truck and really start to buy some meaningful shares.
And give us your outlook for U.S. production, if you would. Of course, there's speculation that President-elect Trump will bring in policies encouraging oil and gas production, roll back regulations, etc. Do you think the U.S. has the capacity to increase production meaningfully in the next year or two?
No, the answer is no, not at these prices. Again, what's the saying? The cure for high prices is always high prices, and that is meaning that look, I think if we're under $70, he can have the mantra of drill, baby, drill, and I've talked to enough of my companies, everything from Exxon all the way down to the tiny companies, and I think unlike the last time he was in office, I think you're going to get very few changes. I think some of these, what was it? The EIA or IEA came out this morning and said, we're going to have a 1 million barrel plus surplus. I just think that's far too cautious. I just don't think the growth is going to be there, and I actually think the demand is going to be slightly better. So, they can say drill, baby, drill all they want, but the U.S. companies, is like the Canadian companies. Number one, they're going to stay very, very capital disciplined and focus on the shareholder returns, as you pointed out. And I think as a result, I don't think production is going to take off near as much as people think in the entire North America.